Hello, welcome to the program. I'm Ladi Williams. First off, let's kick off with the market numbers right here in Africa, where Nigeria's main index was still strong at intraday. It was up by 0.23%, while South Africa's GSE index stumbled by 1.25%. Egypt's EGX 30 closed Thursday session positive with nearly 1% gain, while Kenya ended session in opposite direction, down by 0.38%. Let's move over to the Middle East, where markets were mostly positive at intraday. In the UAE, the Abu Dhabi and Dubai index both posted gains up 0.55 and 0.24% each. On the flip side, Saudi Arabia's index was down 0.98% at the close of Thursday's trading session, while the Qatari index recorded a 0.25% gain yesterday. All right, now let's get an update from Europe. We have Chelsea Delaney standing by right there. Great to have you, Chelsea. Well, all eyes on the presidential runoff election taking place on Sunday, and incumbent President Emmanuel Macron appears to have the edge over nationalist Marine Le Pen. How significant is this?
Well, it is very significant because this is being seen as a battle between the nationalists and the globalists. So it is a significant test of which side has more support in one of Europe's biggest countries, biggest economies. Marine Le Pen is famous for her far-right views. The last time she did face off against Macron in the 2017 election, she was pushing for things like France to leave the Eurozone, which would have shaken the EU to its very core. So she is no longer calling for this so-called Frexit, but she still does have some pretty aggressive policy proposals, particularly when it comes to the economy. And for this election, the economy is really a crucial issue because, like the rest of the world, France is seeing a huge increase in inflation. Many people are worried about their livelihoods. So her proposals are to do things like cut taxes, raise spending, boost wages. And those are things that sound good to voters, probably sound good to all of us. But there are a few major issues with those proposals. Marine Le Pen, for one, wants those to benefit specifically French nationals. So she wants foreigners or immigrants to not really reap the benefits of this increased the social programs in France. Another problem is that economists are warning that spending this much money would dramatically increase France's debt levels. They warn of a financial crisis for France, and they warn that investors could lose confidence in the country. So this is a significant vote because it will show how deep these anti-EU, anti-globalization sentiment is running in Europe, and that's something that continues to carry major risks for the EU, for its economy, and for many countries here.
Right, and speaking of the economy, key data on the health of the European services and manufacturing sectors, have been released. How is this going down in markets?
So we get a number of these different PMI reports. They're all very closely watched among investors because they give an early indication of how the economy is going. From Germany, France, and for the broader Eurozone, we've seen reports today. And to be honest, they were all a bit mixed. We can start with Germany, which was the most disappointing of those three reports. Manufacturing output fell to a 22-month low. And the report noted how everything from Russian sanctions to supply chain issues, and particularly inflation, are eating into demand for Germany's goods, and that's a big problem because Germany's economy is very manufacturing dependent, as we all know. France's economy actually did a bit better in April. The PMI rose to a 51-month high, and the main driver behind that is the services sector. So many countries here in Europe are starting to relax COVID restrictions. People are going back to bars and restaurants, and that is boosting the services side of the economy. That's also the trend we've seen for the broader EU economy. And these reports, the Eurozone economy did unexpectedly pick up in April, once again, thanks to the services side of the economy. These reports also did note in pretty much every one that prices for both goods and services are rising at an unprecedented pace. And I'd say that this is adding to the gloom on trading floors on Friday. We did see European benchmarks slide after the release of these reports. And so investors are looking at this and they're seeing a combination of both growth that is to some degree still holding up and inflation that is showing no sign of really slowing down. And they believe that really adds to the case for the European Central Bank to start picking up the pace of interest rate increases, which is a negative for markets.
Right, talk about rate hikes, at this time. But the first of the European automakers, we see France's Renault and Sweden's Volvo have reported results for the first quarter. How are they handling the challenges facing the car market?
Well, they're doing pretty well, actually. Both beat expectations. Renault said revenue fell about 3% in the quarter, but that was actually better than investors had been expecting. That slight decline in revenue comes despite a 34% decline in sales to Russia, and Renault is, of European automakers, particularly exposed to the war and sanctions because it has a joint venture in Russia that's the manufacturer of a very popular brand, Lada. There, Renault is trying to figure out what to do with that stake now. It's worth about 2 billion euros. They're likely going to have to take a write down on it. But even with that hit, they do continue to see demand for their cars. And even with supply chain issues getting even worse for these companies with semiconductor shortages, they're saying that their order book at the end of March was at a 15-year high. Volvo also mentioned to shake off these Ukraine supply chain issues and report a surprise profit for the first quarter. And it said that one thing that's helping them is a trend we've seen with other earnings reports this week is that they're able to raise prices and it hasn't deterred consumers yet. So we're going to get a lot more reports from car makers in the weeks ahead. But so far, it does seem that they are able to manage the disruptions being caused by the war in Ukraine, by Russian sanctions and supply chain issues.
All right, that's Chelsea Delaney right there in Berlin. Thank you so much, Chelsea. Enjoy your weekend. All right, now let's move on to the UK. Well, we'll have Juliana standing by. Great to have you, Juliana. Well, Britain and India agreed today to step up defense and, business cooperation during a visit to New Delhi by Boris Johnson. They've talked about bilateral free trade deal that could be wrapped up by October. What sound bites are you getting about this?
Yeah, good afternoon, Laddie. Prime Minister Boris Johnson has been on a two-day trip to New Delhi where he's been having a series of engagements with his Indian counterpart, Narendra Modi. And now earlier this morning, we know that this new defence partnership was signed between the two countries. Downing Street have not yet released full details, but we believe it's about the procurement of weapons in an increasingly unsafe world. Both sides believe that because of a series of autocratic regimes that have been popping up across the world, they need to make sure that they can defend themselves. We know that India and China have a bit of a pricky relationship, shall we say, and Britain want to make sure in this kind of post-Brexit world that they have strong allies in that region. So that was part of the deal. The trade negotiation, which was first started by the former Trade Secretary Liz Truss, is hoping to be wrapped up before the end of the year. We know that both of Modi and Boris Johnson have got upcoming elections, so they want to make sure that they can sort it out prior to that. But I think, the elephant in the room is, of course, Ukraine and Russia's ongoing bombardment. There was a joint presser which took place between the two leaders a couple of hours ago, and lots of the questions by the British media towards Boris Johnson was about whether or not he was able to make sure that Modi is more shifting towards the West. I think Joe Biden, the US president, was quite forceful with his words towards Modi because there was a UN vote a couple of weeks ago. We know that India sustained from that. There are no sanctions towards Russia from India as of yet. And we know that they do have a very close relationship. This is Modi and Putin. Boris Johnson didn't really push towards that. He did speak about the Ukrainian soldiers that have just arrived in Britain for training to be able to manage some of this defensive weaponry that Britain is providing. But India is, of course, a strategic partner. We know it's a former colony of Britain, and Boris Johnson described their relationship as one of the most important relationships that Britain holds across the world. So very strategic, very timely, but we have to await the details from the communique when that's released by Downing Street later this afternoon.
Quite interesting, because we know India still buys oil from Russia, and they depend on Russia for most of their weapons. But I know you spoke to Ini earlier, about the retail sales plunge, as consumer confidence nears financial crisis of all-time low. How's this being digested there?
Yeah, not great. The FTSE is trading in negative territory, and that's one of the reasons why. It's because of these pretty poor set of retail volume sales that were released this morning by the Office for National Statistics, showing yet again that the volumes have plummeted in the month of March by over 1%. And now analysts had actually expected the drop to be much less than that, at about 0.3%, particularly as we know that in March things were not as tough as they have been in April, when we saw that 54% rise in energy bills, and of course the introduction or the expansion of the national insurance tax. I think most notably from the data was the fall in grocery sales. They fell 1.1%. They have been falling consecutively since November, just showing that consumer habits have changed. And we saw that, didn't we, with the Netflix numbers that we saw, as well as Just Eat earlier this week. Now that people are not spending as much time at home, they're doing other things like going to restaurants and hotels. So we'll wait to see if we see that in the services data, which will be released next week. And also fuel sales in the month of March, they dropped by 3.7% too. And we know that's directly correlated to what's happening in Russia. And we saw in March oil prices go above $100 per barrel. So unfortunately, it doesn't look like it is going to get any better. If you're in the UK at the moment, all you're seeing on the news is everybody talking about the cost of living squeeze, and that's been reflected in the data released this morning.
Right, and everywhere else. And I saw markets were down earlier, reacting to comments by the US Fed. How's it looking right now?
Still down. Yes, we've got stagflation and inflation woes to contend with, as well as a war just a few hundred miles away from here in London. And of course, those really poor retail sales. So it looks like we're going to be going into the weekend in the red, which was a shortened week. The FTSE All-Share is up 0.78%, but the FTSE 100 is down by 0.82%, and the FTSE 250 is down too by 0.60%. In the currencies market, the British pound is trading down on the US dollar at intraday by 0.84%, down 2 on the euro by 0.69%, and down again on the Japanese yen by 0.89%, Laddie.
Thank you so much, Juliana. Well, enjoy the weekend. I'll talk to you next week.
Thank you.
All right, now let's look at how other markets are doing. Shares in Asia Pacific are lower today as investors watch for market reaction to comments from Chinese Central Bank Governor Yi Gang, as well as overnight remarks from U.S. Federal Reserve Chairman Jerome Powell. Mainland Chinese stocks closed mixed, with the Shanghai Composite rising 0.23% to 3,086 points, while the Shenzhen component dipped 0.29% to 11,051 points. The Nikkei 225 in Japan led losses among the region's major markets, declining 1.63% to close at 27,105 points. Shares of conglomerate SoftBank Group dropped 3.01%, and the Topix index shed 1.19% to 1,905 points. South Korea's Kospi ended the trading day 0.86% lower at 2,704. Australian stocks declined as the S&P ASX 200 dipped 1.57% on the day to 7,473 points. And stock futures were lower in early morning trade today as the S&P 500 tried to avoid another losing week amid busy earnings and rising bond yields. Futures on the Dow Jones Industrial Average dipped 118 points. The S&P 500 futures fell 0.5%, and the Nasdaq 100 shed about 0.06%. Early morning action followed a dramatic reversal on Thursday that saw major averages wiping earlier gains and closing lower. The Dow ended the day more than 300 points lower, while the S&P 500 dropped nearly 1.5%. Tech-heavy Nasdaq Composite bore the brunt of the sell-off, and surging rates sliding 2%. Well, Angola's revised the terms, conditions, and requirements of credit operations to the economy by commercial banks. According to latest data, as of 7th of April, banking financial institutions must, in relation to credit to be granted to the real sector of the economy, grant credit in one of the following ways: medium and long-term credit for investment, including for the acquisition of machinery and equipment, must have a maximum term payback period of investment, and commercial banks must consider, in addition to financing with real guarantees, the type of financial leasing. The National Bank of Angola will decide on the measures, sanctions to be applied on a case-by-case basis, depending on the justifications presented and the compliance record of the commercial bank in question until the 31st of each year. And now to our next conversation. Angola over the last 2 days received a few positive developments. A new agreement with Italy to supply gas, a fresh investment by De Beers, and plans for the country's first ever IPO. To tell us what these mean for the Angolan economy, we have Matt Kindiger, practice lead, Sub-Saharan Africa Frontier View. Great to have you on the program.
Hi, thanks for having me on the program today.
Yeah, so are these developments, a result of the government's economic reforms implemented, in the recent years?
Yes, so we could say partly yes. The flurry of investments that we are seeing into the market over the last few days are partly a result of the government's concerted efforts to improve the business environment, to make the country much more attractive for foreign investors and to support growth. So what the government has done, especially since the election last election in 2017, is it's made it a lot easier for investors to establish businesses in the market, in the country. It's also made it a lot easier to import products. It's reduced restrictions on accessing foreign currency. And crucially, it has made it a lot easier for business travelers and tourists to get visas for Angola. That was previously notoriously difficult, and now it's a lot more straightforward. De Beers, for example, has cited Angola's improving business environment for one of the reasons why it took its decision to invest in 2 new mining licenses in the northeast of the country. So certainly there is a clear correlation between the improving business environment and greater investor interest in Angola. So certainly very positive developments. But I would also emphasize that Angola still has quite a way to go. So over the last few years, the government has been making a lot of pledges around implementing further reforms, such as privatizing sclerotic state-owned enterprises. It hasn't made very much progress in this regard, so there are still a large number of fairly unproductive state-owned enterprises that it controls, and it's struggling to privatize. And this does weigh on public finances and sentiment in general. And also, the government has struggled to meaningfully increase productivity in the manufacturing and agriculture industry. So although there are a number of benefits that the government has seen or the economy has seen as a result of pro-business reforms, there's still a fair way to go over the next couple of years.
Right, still a long way to go there. But will these investments, alter Angola's growth outlook?
So I would actually start by saying Angola's growth outlook is already looking a lot better than it was just a few years ago. So Angola's economy was in a 5-year recession from about 2014, 2015, mainly because of its very heavy dependence on oil. And with the depressed oil price environment and the impact of the COVID pandemic, the economy really was in a very long depression, you could call it. So in recent months, here at Frontier View, we have actually revised up our growth forecast very substantially for Angola. And this is because of 2 main factors. One is that global energy traders are looking for alternative sources to Russian supplies of oil. And because Angola is so dependent on oil for exports and government revenues, the very high global oil price that we're seeing, and we're likely to see oil prices remain close to or above $100 a barrel for the next 6 to 12 months. That means that Angola stands to benefit hugely from this current environment. So our view is that the Angolan economy will probably grow by about 3.5% this year, which is the strongest performance since 2014. So very significant and very upbeat by recent historical standards. But in terms of these recent investments and these recent developments, so for example, the decision by Italy to procure gas from Angola and the new mining investments, they certainly will have a positive impact on the country's short to medium term growth outlook. So we will see improved export revenues and investment levels in the market as a result, but they won't be economically transformative. They're a very good sign, they're a step in the right direction, but what Angola needs to see for sustained long-term improvements in growth is much broader or much higher levels of investment, and also much higher level of investment specifically into the non-oil industry and the non-extractives industry. So we're really looking for much higher levels of investment into agriculture and manufacturing, for example.
Right, not a good time for over-reliance, but the Kwanza has performed well against the dollar this year. Do you see this continuing?
Yeah, so the Kwanza has really been the superstar performer in Africa over the last year or so. So after losing significant amounts or depreciating very significantly from 2017 until late 2020, the Kwanza has actually been the world's best performing currency against the dollar since the beginning of this year. So it's gained about 40% of its value against the dollar to reach about 400 today against the dollar. So very, very significant positive performance. And there are a couple of drivers behind this. One is, again, very high oil revenues, which has driven a significant improvement in forex reserves. So foreign exchange reserves in Angola are rising quite significantly. And also what we saw is the Bank of Angola increase interest rates to around about 20% at the end of last year in an attempt to stabilize inflation. So inflation is running very high in Angola. It's above 20% at the moment, and the Bank of Angola is struggling to bring it down. So what we have seen is very high interest rates in Angola have drawn in some interest and capital from investors seeking much higher returns than they can get in Europe and North America, for example. So those are two reasons why the Kwanza has been so strong. In terms of the outlook, so generally, for the next 6, maybe 12 months, the Kwanza is likely to continue to gain value. And this is because of very strong oil revenues. Again, oil prices will remain very high for the next 6 to 12 months. But there is some downside risk to the Kwanza. So although the Kwanza is likely to remain, it could go beyond 400 into the 300s against the dollar over the next few months. We could see some downward pressure, especially if interest rates rise faster than expected in the US and the Eurozone. We could also see a bit more downward pressure if oil prices fall, or we see oil production in Angola beginning to taper off.
All right.
So certainly a few risks to look out for there.
Right. Well, quite a risky time for both countries at the moment. Thank you so much, Matt Kinniger, practice lead, Sub-Saharan Africa at Front Review. It was great having you. Enjoy your weekend.
Thanks, you too.
All right, now, so let's move over to Ghana. Despite government's fiscal consolidation efforts, Fitch Solutions is forecasting Ghana's fiscal deficit to gross domestic product ratio in 2022 at 9.8%. It's in line with IMF forecast of 9.8% for this year, but far wider the government's target of 7.4% of GDP. Speaking of recent Sub-Saharan African updates, country risk analysts says the high financing gap will constrain growth, looking into Ghana's fiscal position following increased spending on health and household support due to COVID-19 pandemic. Ghana's fiscal deficit widened to an estimated 11.3% in 2021, well above historical level. International Monetary Fund in its April 2022 fiscal monitor report projected Ghana's tax revenue to GDP ratio to increase in 2022 to 16.5% from 14.7% in 2021. It would be a vast improvement compared to rates registered during the last 10 years. And the Kenyan Revenue Authority has retained the fringe benefit tax at 7% for the next 3 months until June on prevailing low market interest rates. Fringe benefit is tax is a levy imposed on employees receiving extra benefits such as cheap loans in addition to their wages. The KRA said for the purposes of Section 12B of the Income Tax Act, the market interest rate is 7%. This rate shall be applicable for the 3 months of April, May, June 2022. Taxable employment income in Kenya includes all payments made by an employer to an employee, and it will include salaries, wages, bonuses, and fringe benefits received or enjoyed by virtue of employment. And that's it on Business Incorporated. Thanks so much for watching. I'm Ladi Williams. Enjoy the weekend.